Hey, Vinicius Brasil, Santa Clara real estate guy with a housing market update for Santa Clara, September 2022. If you've never seen one of my housing market updates, basically I'm going to go over the previous month's sales. I'm going to review some market statistics on Altos to look at some of the trends that are happening right now. And then I'm going to discuss some current events as well as other factors that are influencing our local market. And in the end, make some recommendations or set some expectations if you're a buyer and seller, what to expect moving forward in our market. All right, without any further ado, let's take a look at August sales. I'm right here on my Santa Clara Real Estate Guy website where I post a monthly market update. So you're welcome to visit this website every month. We also send out a newsletter at the end of the month with links to our market update. I'll post the link to this one just down below as well in the comments in case you're interested in accessing the information. So to recap, we saw 46 single-family homes close escrow in August, and that was 10 more that closed escrow than the previous month. So only 36 homes sold or closed in July and 46 closed in August. Now, last year in 2021, there were 60 homes that sold in August. So we're about 25% down from last year's August levels. Now, the average price of a home sold in August was 1.74. That's about $152,000 higher than July's figure. The median price was 1.68. That's about $60,000 higher than July's figure. So it looks like the market has rebounded a bit, and the market definitely has picked up from June and July. We saw a stock market rally. We also saw rates dip down at the beginning of July, and that caused a lot of buyers to jump into the market. And I believe the market did rebound some. Do I believe it's rebounded that much? It's hard to say. It doesn't seem like it's that strong, but here's the numbers, right? Average price per square foot also increased from $1,109 to $1,116 a square foot. So pretty much the same, not much change there. And all the 46 homes that sold in August, only 20 of them actually sold over asking. And of those 20, on average, they only sold 1.36% over asking. Now, probably the most important thing to walk away with is this last detail is we started the month of August with 63 homes on the market. Now, typically August will see the highest levels of inventory for the entire year. So we started with 63 homes and we finished with only 32 single-family homes on the market. So during the month of August, we halved our inventory. And that was a combination of the market picking up and also not many new listings coming in the market in August. We also have this really neat infographic that summarizes what I just went over. So you can take a look at that on our site as well. Now let's take a look at what Altos Research is stating. So if you're not familiar with Altos Research, it's a program that we subscribe, we share it with our clients, and basically they receive an email every week that lets them know what's going on in the market. It talks about median price, price per square foot, inventory, all those details, and you'll find it in your inbox. If you're interested in subscribing, you can go down to the comment section below and sign up. And you can sign up for any city or zip code in Santa Clara County. If you sign up for the zip code, that information will be more accurate for your particular home. Now in this case, we're looking at Altos Research. We're looking at the trends for median price, and we can pretty much see median price has stayed fairly stable these last 3 months. So this whole trend line right here is for 90 days. Same thing for median list price. It stayed relatively stable here. Price per square foot, pretty much the same, maybe a little bit of a slight increase. Average days on the market, of course, has decreased, and we saw that with inventory decreasing as well. So the market has picked up. Median days on the market has stayed pretty much the same. Price decrease or percentage of homes that have decreased their price has stayed roughly the same in the last 3 months. And we also see the level of inventory has dropped from, let's say, the middle of July, where it was around 60 homes, all the way down to what they're stating now, which is about 37. Now, the Market Action Index, which is a proprietary metric that Altos uses to gauge the strength of the market. The higher the market action index, the stronger the seller's market. As the market action index is dropping, it's indicating that the market is weakening for sellers. So we can see that figure in the beginning of June was as high as around 82, and now it's around 67, and it went down to as low as 63 over here in the beginning of August, and it's picked up a little bit, but it seems to be stagnating a little bit, and we'll talk about that as well. The great thing about the market action index is that you can get these emails every month and just look at the market action index, and it'll tell you exactly what you want to know. Is the market getting stronger or is it getting weaker for sellers? There's been a lot going on in the news, and most recently, just yesterday, the chairman of the Federal Reserve announced that they're going to be raising the federal funds rate another 75 basis points. But that was pretty much expected. Now, how did the market respond to that? Well, interest rates inched up a little bit. The stock market did sell off fairly strongly, and was an indication that the Fed is really serious about fighting inflation, and they are not going to drop interest rates until they feel that inflation is completely under control. Other big headlines that we've seen in the last few weeks is Amazon making plans to close or abandon some warehouses that they were planning to build throughout the United States because they anticipate a slowdown. FedEx also made the news announcing that they are noticing a slowdown in shipping as well. Also, the Google CEO had hinted at layoffs when he mentioned that his company is going to have to be more efficient moving forward. Google also announced that they're closing several different projects, and people are anticipating layoffs at Google. So it's clear that the economy is starting to slow down and that we're entering in a recession, which means zero to no growth, or maybe even potentially negative growth in the next few months. So we can't really expect that the stock market is going to start rallying anytime soon. Other factors that are affecting the local real estate market are interest rates. So after the Fed announcement yesterday, rates dipped down a little bit, but today they're up about 0.2%. Now these figures are for nationwide averages, and it says here a 30-year fix is about 6.62. And we can see right here how interest rates have been fluctuating in the last few weeks. Right around late June, they started dropping, and in the beginning of July, they went down as far as 5%. But since then, they've steadily climbed all the way back up to the mid sixes, to where we are now. Now, interest rates haven't been this high since 2008, as you can see here. Now we're looking at the NASDAQ right here, and after the Fed's announcement, we saw stocks sell off heavy in the afternoon, and they were down about 1.8%. And as of today, stocks are down about 1.5%. So we're nearing the lows that we were for the year that we hit in June. So interest rates are higher than they've been in the last 8 years, and the stock market is starting to correct down to close to its 2022 lows. So this is going to affect affordability. And as a result, I would expect in the next few weeks that buyers are going to start to cool off because they realize that things are going down. In anticipation of home values going down, more likely they're going to be more cautious about making offers on homes. Now, how is this all going to affect our local housing market? Well, we shouldn't be expecting a lot of growth in the stock market for the rest of the year. The Fed is going to continue on raising interest rates and slowing down the economy. Now, although job losses are probably not going to be very high in the Bay Area, we will expect some, and these will likely keep buyers on alert and cautious about making a big purchase like a home. Also, I would expect interest rates to continue to creep upward as the Fed is slowing down the economy. So even though we're noticing interest rates at the highest level that they've been in 8 years, expect to see them go up even higher. So what is this going to mean for housing values? Well, I expect to see a gradual slowdown in the housing market, but it may not be that bad. So inventory is low and we're moving into the fall season, which typically doesn't see a lot of new inventory being introduced in the market. Now, this is going to help the home values stay up. In the slowing market, I would expect homes to take longer to sell. And what this causes, it causes some anxious home sellers who need to get their home sold to start dropping their prices And this trend is what causes home values to start to drop. And now, because inventory is already low and we don't expect there to be much inventory towards the end of the year, I don't think we're going to see a huge drop in home values between now and the end of the year. So I expect there to be a gradual drop in home values throughout the rest of the year. Now, home buyers, what does that mean for you? Well, if you see the right home that you've been waiting for the last few months, I would jump on it. Chances are that that home isn't going to get a lot of interest. Now, does that mean you need to go crazy and overbid as much as you can to get that home? Well, that really depends on you and how much you want that home, but I would proceed cautiously. If you don't get that home, chances are in the next few months, you might be able to find the home that fits your family's needs. Sellers. Now, this is a tricky situation. Home values are dropping towards the end of the year. Maybe you're planning on selling next year and you just don't know what to do. Do you need to speed up your home sale? Should you wait? Well, it's hard to answer that question, right? We just don't know when the Fed is going to stop its interest rate hikes or even start to reverse it. That may happen sometime next year. Maybe it happens in the late spring or late winter. So rushing to sell now where you could have sold next year and the market might be potentially better might work out in your favor. But if you ask me, it sounds like the Fed's really serious. It sounds like they understand that they are going to be slowing down the economy and causing a lot of pain, and they're okay with that because their primary objective is slowing down and stopping inflation. So as a home seller, you may want to think about trying to get your home on the market sooner before home values drop, and also maybe taking advantage of the low inventory that we're going to be seeing in the next few months before we start the beginning of the year and we start to see inventory increasing. If you've got any questions about the housing market or your Santa Clara home and how it fits in to the current market that we have, you can schedule a call with me. I'm happy to talk to you, happy to talk about the current market and what could be the best course of action to get your home sold. Until next time, this is Vinicius Brasil with the Brasil Group. See you then.